next up, it's innovation and new technologies, which are presenting emerging markets with new opportunities, great opportunities, and also, as we've been discussing, driving disruption. Steve Weeple is Client Portfolio Manager for several global and emerging market equity strategies. He will moderate our next panel on innovation in emerging markets. Steve, over to you.
Lucy, thank you very much. Hello to everyone. I'm joined today by Daniel Grana and Matt Culley, who are the portfolio managers on our emerging market equity franchise. And as Lucy said, we're going to focus today on some of the most exciting developments within the emerging markets as we see them. Daniel, the last couple of years have been pretty tough ones for the emerging market asset class. We've seen the challenges of dealing with COVID and that impact on supply chains. There's been some volatile and some populist politics across the region. We've had some Chinese regulatory surprises in the slowing of that economy. And now we see the prospect for rising US and global interest rates. Amidst all those challenges that face the emerging markets, what is it that excites you about investing in that asset class right now?
Thank you. I would say that historically there were two reasons to get excited about emerging markets. The first is outsourcing. And so increasingly more and more companies would be able to build things cheaper, better, faster in emerging markets. There's lots of successful business models in emerging markets as a result. And then the other is convergence. That as income levels rose, households would demand cars and homes and so forth. But now there's a third emerging reason to invest in emerging markets. And so what gets us excited about emerging markets is innovation. That increasingly we're seeing emerging markets not play a supporting role or sort of a late adopter role, but actually a leading role in this innovation. There are fantastic companies that are leading the charge to solve local frictions that gets us very excited about emerging markets.
And as you said there, the emerging market companies and countries have traditionally been much more of a follower than a leader in previous waves of innovation. What is it that you're seeing right now that you think is changing that?
The ecosystem to drive innovation in emerging markets is now in place. Think the digitally savvy population that have access to the internet via smartphones. Think the tremendous pools of engineering talents, engineers, mathematicians, scientists that are graduating every year in local universities, as well as those that sort of study abroad. And think of the healthy R&D spending that we've seen in all these emerging markets. A lot of these entrepreneurs are also returning home. They see fantastic opportunities to sort of launch their own businesses after having worked in a multinational context in the US, Europe, Japan, and so forth. And so the exciting thing is that the building blocks are in place to sort of drive that innovation in emerging markets.
You mentioned a number of things there, and amongst those is policy support. In terms of the support that you're seeing from policymakers across the region, why is it that they are trying to encourage innovation?
So clearly, there have been very few emerging market countries that have successfully made the transition from low income to middle income to high income. And one of the clear success factors is innovation, how well innovation gets penetrated throughout the economy. And so it's clear that in order to get out of the middle income trap that a lot of countries find themselves in, they need to drive innovation. And so a lot of these governments are encouraging in terms of land grants or tax benefits, or setting up favorable regulatory environments to encourage the formation of new companies. And so VC private equity money is being made available. Banks are sort of driving the opportunities in terms of access to capital markets. And so the reality is that a lot of the window has now been open, capital markets wise, government policy wise, to drive innovation, because a lot of governments acknowledge that this is the way you successfully transition your economy from low income to middle income to upper income.
Fascinating. Matt, where is it you're seeing this innovation being most prevalent? What are the countries, what are the industries, what are the technologies where you're really seeing this take hold?
Yeah, I think what's perhaps most interesting is actually just how broad-based innovation is. So, we're seeing it in healthcare, e-commerce, finance, logistics. Everywhere really is seeing an explosion of digitization. I think maybe it's helpful just to use a couple of examples to bring this to life. And I don't think we can talk about emerging markets without talking a little bit about China. So just backing up for a second, just starting with the problem that many of these innovators are trying to solve. So in China, 60% of GDP comes from small businesses, but they only get 40% of total social financing. So there's a real lack of access to credit. And when they do get credit, they're paying really high interest rates. At the same time, working capital cycles are really, really long. They're double that of the rest of the world. So just to put it into context, if I'm a small business owner and I sell a large enterprise a widget, they aren't going to pay me for 6 months. So that's a really, really long time for small businesses to have to go without getting paid. So how do we solve this? We're finding innovative companies that are using blockchain technology and AI to essentially create digital representations of those supply chain contracts. So think of that same example. Small business sells enterprise a widget. Enterprise owes small business money. We're creating a digital NFT of that contract and then enabling that to be used as collateral to either get access to credit or be able to use that as a digital currency to pay their suppliers. Think about this though. This is a trillions of dollar industry and is a byproduct of many of the frictions that are really unique to China. So just think about how big of a benefit that innovative solution can really have to society. But you'd also asked about, from a country perspective, we're actually really seeing this spread west as well. So India is actually particularly exciting right now. Again, let's use an example. So there's a real lack of access to healthcare in India, and the prevalence of catastrophic healthcare spending is one of the highest in the world, according to the WHO. So there's a real need here. So we're finding innovative businesses that are really building end-to-end solutions and starting, digital first. They're creating integrated e-pharmacy businesses with nationwide logistics that can give medicine to consumers in under 2 hours. Combining that with telemedicine and on-demand at-home diagnostics to enable doctors to be able to reach patients that they never were before. And all of this is integrated into a single system. So doctors can see more patients for a longer period of time and can get them the treatment that they needed faster. And that really has the potential to revolutionize access to healthcare for 1 billion people. So as I said, we really have seen a lot of the beginnings of innovation start in China and really work its way west. And we're even starting to see a lot of those seeds for innovation start popping up in EMEA and Latin America as well.
Great. Daniel, Matt referenced the Chinese technology sector there, and many of us will be well aware of the well-documented challenges to the technology sector in China over the last year or so. There's been some fairly aggressive policy moves, and some of those have hit equity values pretty hard across a number of industries. Is that in the rearview mirror, or does that still remain a concern for you?
Certainly, perhaps the way or the severity of these regulatory actions have caught many of us by surprise. But it should not come to a surprise that big tech is in need of regulation everywhere. And the only question is how China is doing differently than others. Certainly, what China's focused on is not only making sure the innovation is actually happening in the direction that they want it to take, where the innovation government would like to see, but also in the sense of this common prosperity theme that the government wants to have. They don't want the big tech companies to abuse their monopoly positions to sort of build further monopoly positions in new verticals. They want to regulate big tech. And they want to make sure the benefits of not only just the industrialization, but the digitalization, the benefits of having these fantastic companies disrupting existing industries, that those benefits are not just seen by the few, that they have to play fair, and that the general population needs to benefit from it. And so those companies, mainly the platform companies, that were seen as abusing their market position, seeing as excessively profitable, those were targeted by regulatory surprises in 2021. To answer your question, I would imagine that most of that adjustment has taken place, but we shall see. Clearly, the rules of the road of investing in China are different, and clearly what the government would like to see is innovation, decarbonization, and common prosperity. And so when you invest in companies in China, you need to keep that in mind. That are the companies being politically correct in the sense that are they following the national development goals of the party? And the party clearly has laid out what they would like to see. They don't want to kill the golden goose if the goose is laying the golden egg of innovation. What they want to do is make sure that there are no abuses in the system.
Daniel, we know another big concern for shareholders across the world, certainly in the developed world, increasingly the emerging market world, is understanding the environmental and the social and the governance characteristics of the companies that they become shareholders in. Is that a concern? Is that a characteristic of investing in the emerging markets just now? And if so, what does innovation bring in terms of understanding the E and the S and the G?
There are fantastic reasons why innovation should be encouraged by ESG forward investors. There are many stories of how low the bank access, financial access to the financial system is across emerging markets, how the catastrophic healthcare spending across emerging markets. These are frictions that exist in emerging markets, perhaps to an extreme end in emerging markets and relative developed markets. But this is the beauty of innovation. Those people who were outside of the access of the formal banking system, now with fintech could potentially get access to the financial system and all the benefits that comes with that. Perhaps telemedicine would help solve a lot of the problems of catastrophic healthcare spending in emerging markets. It lowers the barriers to do business. It changes the game. Incumbents have been slow to increase their sort of target audience in terms of who the target customer is, but with technology, it lowers the barriers to reach them. And so the wonderful thing about innovation is that it unlocks previously populations within emerging markets that didn't have access to financial, healthcare, education, and so forth. That's the exciting part, the sort of ESG benefit of investing in innovation in emerging markets.
Interesting. Matt, investing in the most innovative companies, I think most of us would consider has traditionally been the role of venture capital and private equity. What role do you think that public equity asset managers have to play in this development?
Yeah, the nature of capital markets have definitely changed over the last couple of years. We are seeing more VC money coming in, and interestingly, companies and many of these innovative companies are actually staying private for longer. However, increasingly, many of these companies are actually reaching out to select equity managers to build relationships before they come public, to establish those relationships for the long term. We remember, companies can't choose their public shareholders, but they can choose their private shareholders. So increasingly, we're seeing them reach out for investment opportunities before they come public or as anchor investors in their IPOs. And I think that this has two benefits for the company. First, it credentializes the company. They like to display the quality of their investors and who's been backing them for how long. And again, it also then established that relationship for when they go public.
Thanks, Matt. Daniel, we started our session today sort of addressing the challenge of investing in the emerging markets. We know there's lots of challenges, there's headwinds, there's dynamics that people might not consider would be supportive of emerging market equity valuations. Maybe you can just leave us today with your thoughts about the asset class. And again, what is it that excites you about investing in the emerging market equities right now?
The story of emerging markets is changing and evolving. Before the global financial crisis, there was this great story that all emerging markets would benefit from sort of the emergence of China as a trading partner, as an end market, and a rising tide lifted all boats. The reality is investing in emerging markets going forward from this point is very different. Those that drive innovation, those that encourage innovation, those that have large domestic markets that can sort of offset some of the pressures from deglobalization, those are the countries that are going to be successful. And those companies and countries that will benefit from decarbonization, they are also not evenly spread throughout emerging markets. And so going forward, this is not a story of a rising tide lifting all boats. There will be significant differences across emerging markets and by sector of the beneficiaries of innovation, the beneficiaries of decarbonization, and also those that lose out, that are not well prepared. And so clearly, this is a situation where active management does matter, because you need to have a guide that will sort of choose the right countries and choose the right companies that will benefit from all these mega trends that are happening in emerging markets.
Great. Daniel Grana, Matt Culley, thank you both very much for your time today. And we'll hand it back to you, Lucy. Thank you.
Steve, thanks. I mean, you mentioned the headwinds and the challenges there, but I thought it was great just to hear the excitement from you all around this role that emerging markets are playing in innovation, the leading role it seems they're increasingly playing, and also all that talk about the ESG benefits. So it was really great to get the thoughts of you all. So Steve, thanks for moderating that, and Matt and Daniel as well. Good to see you.